Okay, so hello everybody. We start off topic one now. And as you can see that in this course of global financial management, the topic one is about the Forex transactions. And this is very interesting topic and this is very useful because the multinational companies or many other companies, even though they're not multinationals, they have lots of exposure to the foreign exchange reserves fluctuations. So the exchange rate quite often go up and down. Sometimes this fluctuation is favorable for you. Sometimes it's unfavorable. So we can't take things for granted. So things can go in your favor or it can go against. But before I go to that situation, let's first discuss some fundamental concepts of the Forex transaction. Forex is an abbreviation of the foreign exchange. We use normally the symbol FX as for the Forex, and transaction, you know what is a transaction. So basically, it's about the exchange rate fluctuations. These are the contents of this topic, which we shall study, but we will go slow one by one. So first of all, we go and discuss the meaning of exchange rate. Exchange rate could be, and these are some learning objectives, but I think you can study by yourself, so I don't want to get into them too much yet. The exchange rate, it can be. So the exchange rate, we can define it by many ways. The exchange rate can be defined on the basis of different criteria, parameters, the benchmarks. The first benchmark of the exchange rates definition is the direct quote or the indirect quote. The direct quote is the one which we use or which we should use. We should not use the indirect quote. The direct quote is, as you can see the definition, it's a units of local currency per unit of the foreign currency. So for example, if you're living in the US and you have this kind of quote, as you can see, that GBP1 is equal to $1.2849. So if you are in the US, then this is a direct quote of the British pound or the pound sterling or the GBP in the US. And look at the definition, the first line. It's a units of local currency. What is the local currency in the US? It's American dollar. So it is the number of units of the local currency for per unit of the foreign currency. So if you're in the USA, then GBP1 will be a unit of the foreign currency. If you write like this, then this is called a direct quote. Okay, then this would be called the direct quote. And this is the way it should be. For example, in Finland or in the Eurozone, including Belgium, France, Germany, if we write that GBP1 is equal to Euro 1.1565, then this is the direct quote. And this is the way it should be written. If you are in the Eurozone and you write down Euro 1 is equal to so many pounds, then you are following not direct quote, you are following indirect quote. And if you are following the indirect quote, then what you think is your gain is basically your loss. And what you think is your loss is basically gain. Okay. So to avoid the confusion, I suggest to you that whenever you do some calculation for the assignment, for the examination, or even in the practical life, always make sure that which country you are in, call it the local currency. Call that country's currency as the number of units you pay for the 1 unit of the foreign currency. This is the right way to write. If you don't write this way, then there is a big mistake can happen. If you work in some financial institutions, I know there are softwares and they automatically do this adjustments. But I think if you are doing on a piece of paper, if you're traveling and you want to buy some, let's say, for example, let's say you are at the airport in Amsterdam and you want to fly to Britain and you need some British pounds, you want to buy them. If the rate of exchange is given like this, then you should do your calculation. But if you are in Amsterdam and the rate of exchange is written like this, I'll show you something. If you are in Amsterdam and the rate of exchange is written like 1 euro is equal to 423 pound, yeah, 0.785. And remember, you are in Amsterdam. You are in Amsterdam. Then this will be making your calculation wrong. You know why? Because you're in Amsterdam, which is a part of Eurozone. So therefore, the foreign currency is pound. So it should be a pound. And here should be the local currency, which is a euro. Do you get my point? So if you are in the Eurozone, then you should never, ever, ever put the 1 unit of the local currency here. Never do that. The local currency should always be here. So basically, if you are in Amsterdam, then you should always make your calculation like this. Sorry. If it is a pound, I don't know exactly now what was the value, but I can just make some random guess that it was 1.2, let's say, doesn't matter. Okay. So this is a direct quote. So this is a wrong and this is right. So if you're in Amsterdam or any part of Eurozone where you use euro to buy the grocery or pay the bills, then this is the right way to write the exchange rate. Okay, so this is called indirect quote, the one which is wrong. This is called indirect quote. And we should never use it. We should always avoid it. But if you are in Amsterdam and you write like this, then this is called the direct quote. This is called direct quote. And you must do calculations as per direct quote to avoid any confusion. And if ever you are in Amsterdam or any other Eurozone and you happen to have this type of exchange rate, which is indirect in Eurozone, but don't you worry, there is a solution. The solution is that direct quote is basically equal to 1 divided by indirect quote. So in other words, if you want to find the direct quote, then you should divide. If I divide 1 by the indirect quote, which was pound, 0.785, then it should be equal to 0.785 should be equal to euro. I don't know it's exactly equal, but because I just imagined, then it should be equal to 245 euros for 1 GPP. So it's not a problem. You can easily convert the direct quote into indirect, and same way, if you want to make it if you have a direct quote and you want to make it an indirect quote, just divide the values by, just divide 1 by the value. You will get the indirect quote. But normally we never calculate indirect quote from direct quote. Usually, if you find that this rate of exchange is the indirect quote according to the local currency, then you can find it the direct quote by dividing 1 with this value, and you will get the direct quote for sure. So this is how we do the calculation and how we convert the direct and the indirect quotes. Okay, so this is the way. This is a very basic mechanism to do this conversion, but you have to be very careful. In some countries in the world, or in some cities in the world, often the quotes are offered indirectly by default. So in that case, you should be very careful. I want to give you an example. Imagine if you are living in Britain and you are reading Financial Times. Very often, you will see the rate of exchange like this. A pound is equal to, let's say, euro 1.245, just imagine. And you are in the UK. First of all, tell me, is it a direct quote or an indirect quote according to the UK?
That's indirect quote.
It's an indirect. But believe me, if you're working in some hedge fund in London, in Glasgow, in Birmingham, in these big financial markets, you will find that often the rate of exchange is given like this, indirectly. So your first job as a fund manager should be, or as a banker, must be that always convert the rate of exchange from indirect quote to direct quote. So what would you do? You will divide 1 with 1.245, and then you will have this type of exchange rate. This is fine. Look, this exchange rate is fine if you are in Amsterdam or any other Eurozone country. But if you are in Britain, then this will be the direct quote in Britain. Yeah, can you see this? 1 euro is equal to pound 0.785. On the right side, or this number of units should always be of the domestic currency. Okay, so the domestic here in Amsterdam, the domestic currency is euro, so it's here. In Britain, the domestic currency is here. So whatever is indirect in Eurozone is direct in Britain, if the base currency which you're talking about is GBP. But I hope you understand what it means, that how you can change the quote from one form to the other form. It's very essential that you always, first of all, whenever you have a question in the exam, whenever you see the data from some company's annual report, always, first of all, check that is it a direct quote or indirect quote? And if it's direct quote, okay, give the green signal. And if it is a indirect quote, put the red mark and make sure that first you change it to the direct quote, and then you start doing calculations. Never do calculation first and then do the conversion. Never do it. First do the conversion of indirect to direct quote and then do the calculations. Otherwise, things will go horribly wrong, believe me. So make sure that you never forget this first mantra, that always, always, always have the direct quote. Okay, so now I go to the next slide. I hope you understood this very basic stuff. New share. So where are the slides? Yeah, here we go. Right. And often you can see the data of these exchange rates in the financial media. I think it's a good point that I should show you that what financial media you can see in the because I want to get you the exposure to the real markets, the functioning financial markets, not just the theoretical one. So here we go. Just a sec. So if I say Yahoo Finance, can you see that I'm sharing the screen with you? Can you see it?
Yes, we can.
Yeah.
Very good, very good, very good. Yahoo Finance, a fantastic website. If you want to see the real, I mean, the data, and you want to download the data, you want to see what is happening in the markets around you, then I think this is a fantastic source. And just click it, and here you see, for example, you see those tickers, but of course we can see more in a more detailed way here. Look at that, for example, euro versus US dollar. So you can see that this is the rate of exchange for €1 in the US dollar. So you can say that, I mean, euro, US dollar. So if you are, okay, I want to ask you a question actually. Hey, did you notice that the rates are changing? Can you see them? They're changing very fast. They're coming and going.
Yeah.
Can you see? Because the market is fluctuating every single second. That's why. And if it is green, it means the value goes up. If it is red, it means the value goes down. So you can see that the values, the numbers are not only changing, but they're also green and red, which means that if it is red, it means the value is going down. And if it is, if it is green, it means the value is going up. But if it is down, red, it means the value is going down. Look at this MSFT, for example. This is Microsoft. And you can see that for the last few minutes, Microsoft's stocks are rising fast. But whereas if you see the value of euro in the versus US dollar, it's going down. It's red, red, red throughout. But my question is something else to you. My question is this 1.1847, which can change any moment. Now it changed to 1.1848. It's a direct quote from which geographical region? The USA or Eurozone? That's my question to you. It is a direct quote from the US perspective or from the Eurozone perspective?
US perspective.
US perspective. Because it is €1 is equal to US dollar 1.1845. And US dollar is the local currency of the USA. So obviously it cannot be euros. It means this 1.1847 is the direct quote if you are in the America. But if you are quoting the same quote in the Eurozone, you can make horrible mistakes. Because then it should be a US dollar equal to so many number of euros or cents. But that's not a problem. If I divide 1 by 1.1847, I can find out the number of euros for each dollar. And even otherwise, it's time. It's about 8 o'clock here in Finland, and I think it's 7 o'clock in Belgium. And, you know, and all the markets in Europe are closed. So, and this green and red shows that the markets are active. So where do you think markets are active right now? In the US or in the Eurozone? Where is noon or afternoon or early
USA.
evening. Yes, the US. So yeah. So make sure that you should, first of all, you should know that you must identify yourself that where you are based. Not in reality, because I can ask you some question which you can guess that the question assume that you are in the US. So always must recognize that which is the the domestic region. Right. Good. Good. So I hope it makes sense to you. And it's Yahoo Finance is a fantastic website because you can see all the trends. Like, for example, we are seeing that Microsoft has been so much gaining this today. I mean, it's getting far. Since I opened this page, I haven't seen Microsoft turning red. And I haven't seen the price of euro getting red. It basically means that in the US dollars, in the USA, the euro is getting cheaper today. That's why you have to pay less and less pound. That is why you have to pay less and less American dollars to get a euro. It means today in the American markets, euro is going down. But if it turns green, then it will go up. Okay. So that's the basic thing, but we will come to this website quite frequently, but I recommend you that you should, this is a very good source for a beginner to get. And you can get a lot of information, and not only US dollar versus, and you can also see the Bitcoins also, cryptocurrencies and stuff like that. But I want to show you the more, you have Euro versus US. Where are the other currencies, for example? Stocks. Also see the other currencies. Let me find out for you. Unfortunately, because of this recording, there's so many button stuff around me that I can't see the page properly. Markets here. Why not the? Oh, there was currencies. Okay, here we go. And now you can see that there is a page of the currencies. You can see the Euro versus US dollar, then Japanese yen, the British pound, Australian dollars, New Zealand dollars, and then you have the Euro Japan, GBP, Canadian dollars, Swedish, not Swedish, I don't know, what is SEK? Is it Swedish kroner? Yes. And CHF is a Swiss, what is the unit of currency? What's the name of the currency of Switzerland? Swiss franc?
Yeah.
Sorry?
Yeah, francs.
Swiss franc, yeah. And then you have the Euro HUF. Is it Hungarian Funget something?
Yes,
and
it's
then you have the Hungarian Funget, and then there is Singaporean dollars, Hong Kong dollars, Indian rupees, INR, Mexican peso, I guess. Yeah, so Indonesian rupee, Thai baht, you can see here, Thai baht. So all these things, you can have full page. And if you click one of them, just one of them, then you can see more data, more description. Why is not opening? Let's try some other one. Oh yeah, sorry, this opened already. It takes time. I was too. So you can see that today, one day. All right. So today, is there a drawing here? It should be. There should be a drawing here as well. but maybe I'm too impatient. Here we go, chart. Sorry, it's taking a while because, oh yeah, now it comes, I guess. Yeah. Yeah. It's taking big time, but yeah, here we are. So here you can see that in the last 3 months, the Japanese yen versus euro, it means if you want to buy the euro in Japan and sell, and you can see that the rate of exchange has been so much. So you can see that here, this time, the value of euro in Japanese yen was very high, but then it was going down. And at some stage, it went very down, actually. You can see here, look, massively down. And how much was this, actually? Yeah, this much is very low value. And this was on 2nd of November. So the last few months, euro is not doing good against the Japanese yen. So you can see the fluctuation, and you can change the time also here. I think you can also, if you want to see the 1 day, then you can change. You can choose the time from here. You want to see for every 1 minute, 2 minutes, 5 minutes. That's up to you to see. But once again, we will come back to this this website quite often, and many more websites. It's not the only one which we will have reference to. And there we go. So now you know what is direct and indirect quote, yeah? So this is something which you should always remember. Okay, so we carry on our categories. And here, basically, I wanted to show you that that how the rate of exchange shifts quite fast. Usually, when you see the quotes in the Yahoo Finance, for example, so you will see that it's GBP versus vis-a-vis USD. So the first currency is the foreign currency. So if you are in the US dollar, if you're living in the if you are in the USA, then your pound is a foreign currency. So 1 unit of the foreign currency, 1 unit of GBP is equal to 1.2849. And this I took some time ago. I don't know when, but I just took a screenshot of this price, of this exchange rate. And even on that day, I saw that pound was losing value against the American dollar. So it was going down, and you can see there's some more information. There's a word called open. Yeah, open. Open means when the market opens in the New York, for example, stock exchange or some other US market, the opening price, when the market just opens at 9 a.m., usually, the price of 1 GBP was USD 1.291. And the previous close, so the market, so if today at 9 o'clock, when the market opened, sorry, these are some pop-up messages coming up. So when today the market opened up at 9 a.m. in the, let's say in New York, the price of £1 was 1.291 US dollar. But the previous close mean that when the market was closed yesterday, it closed at 1.291. Usually these rates are same, but it could happen that if there's a big news, then they can differ. For example, the market closed at 1.291. Okay, and overnight something wrong happened in the USA. Then when the market opens next time, then the foreign currency's value can go up because the dollar's value can go down. And then we have the bid price and the ask price. I'll come to it later on, but the bid price is the one at which the bank buys the price from you, and the ask price is at which the bank sells to you. And the range means that during the full day, the minimum was 1.284 value and the maximum was 1.295. Okay, so this is how we quote the quotes. But I will talk more about bid, ask, these things a bit later. But that was just like an introduction, that when you look at the Yahoo Finance page and you want to see the graphs, it would look like this. And I think you saw one graph and it was dollar vis-a-vis, no, it was euro with Japanese yen. And you could see that it could be different price on different dates. Okay, we move to the next slide now. And then here, the same example is continuing, so I will not, but I can give you one example here that the direct code is equal to 1 minus indirect code, and the indirect code is equal to 1 minus, not minus, 1 divided by, sorry, I shouldn't say minus, but 1 divided by this. And I think I showed you one example when I assumed that just imagine you're in Amsterdam, and we took one example there as well. So you can see that if you are in New York, and if you are in the New York and you want to see the rate of exchange of Great Britain pound, then this is the direct code. Okay, but if you see like this in New York, then this is not a right way to do the calculation, because your local currency is here and the price is quoted in some foreign currency, because in the US, the GBP is a foreign currency. Always make sure that the price is calculated in the domestic, local, national currency. And if you are in the US, then it's American dollar. This is perfectly fine if you are in London or any part of Britain, but this is not fine if you are in the United States of America. But the good news is that it's not a problem. If I divide 1 by 0.6569, you will have this value. Because the formula is, you can find the direct code by dividing 1 with the indirect code value. And there we go. Okay, but I warn you again that if you're working in some hedge fund, in some financial institution in London, New York, then very often the rates are quoted indirectly. So you can, in Britain, you can see 1 pound is equal to so many euros, so many Japanese yen, and so on and so forth. That's an indirect code, because 1 pound should not be written in the American market. In 1 pound should not be written in the British markets. It should always be 1 unit of the foreign currency. But you can see it. Same way in the American markets, you can see a quote like this very often. In Bloomberg, in some New York Times, or in some Washington Post, when you go to their, or Wall Street Journal, if you open their pages, you might see the quote like this, which is an indirect quote from the US perspective. So your first and the foremost job should be that make it direct quote. Okay, so I said many times about it now, so I hope. Chat, something is, why published? Well, I think why they publish them, because they're the big markets, and many people, many foreign traders are also watching the British markets and the American markets, many foreign. So for them, to make their life easy, they quote it in $1. But if you are a trader in those countries, then you have to be careful. Okay, and also because these countries, they also feel that, if proud that, why should we write the price of 1 unit of a foreign currency? The others should write their prices in 1 unit of our currency. So it's a matter of some kind of financial pride as well. Okay, so that could be reason, and it's also convention also. Okay, so but as long as you know that how to modify the price from indirect to direct quote, if this thing is in your head, you will not go wrong. So this is the first lesson you learn in finance, in the multinational finance, that always check that the rate of exchange is given in the direct quote, never in the indirect quote. Okay, and don't take it. And then we have the spot rate and the forward rate. The spot rate is that the word spot, like we say on the spot, something on the spot. Like for example, you are at the airport and you want to buy some or sell some foreign currency. You go to Thomas Cook or Western Union or some other shop. You often see them at the airports, and you see that on the electronic board, display board, you see the price of a yen or a pound or a American dollar or the Canadian dollar. Okay, all those codes which are flashing on the screen are the spot rate. Spot rate. These are the retail price. You know the retail price, the price you want to buy something, so you just pay and get. That's it. Okay, and I call it S means the spot rate or the value in the T period. T means right now, in the current period. So that price, that value, which is prevailing currently, is called the spot rate. Okay, often if you are a consumer, customer, individual customer, you often buy these rate of exchange. I mean, if you're doing holiday, you want to go to America for holidays, you want to go to Australia for some short term, some seminar, and you might need their local currencies, then you will be buying them from the spot market. Spot market you will be buying from. But there is a catch. The catch is that if you are a Belgian company and you are exporting, or let's say you are importing something from Australia, obviously you will be buying not a few Australian dollars worth good, it could be millions of Australian dollars worth import shipment you want to get. And if you go to the spot market, that's not possible because that's very expensive. In that case, you go to the forward market. The forward market is that, okay, let me put some example. Remember the word forward, okay? Now I want to give you an example. And for this thing, I need to take you away from the slide and go to the whiteboard, which is here. And I go to the next example. Just imagine ABC, a Belgian company, importing some technology from Australia on what date is today? 19th of November. 2020. If ABC was a individual who is traveling to Australia today, he or she would just go to either in the city center or in some shop at the airport and would buy Australian dollars. But the problem is that is okay for the small amount, but it's not okay for the big amount. It will pay. It means the ABC will pay. I should write clearly, otherwise it will be confusing. between who will pay, Australian or ABC. ABC is the Belgian. ABC will pay to Australian company Australian dollars 30, 1, 2, 3, 4, 5, 6. In other words, 30 million Australian dollars. But the deal is that it will pay in March 2021. It means you will buy the goods from Australia now, but you make the payment in today. Now is November, so December. So in 4 months' time, or little over 4 months' time. Spot rate, spot exchange rate rather, is 1 euro equal to 1.25 Australian dollar. Is it the right rate of exchange if you are calculating for the Belgian company?
I think that's indirect. That's not the right way.
It's a wrong way, yeah? So what
Yes.
should I do then? What should I do then?
Slap the currencies.
You said it's an indirect quote, yeah?
Yes.
What should I do then? I should do one thing. I should say that 1 divide by 1.25 Australian dollar, and this would be equal to basically, if I do this calculation, it will be euro 0.80 or 1 Australian dollar. The rate of exchange become 1 Australian dollar equals to euro 0.80. Is it fine now? Is it okay for the Belgian company?
Yes, it's clear.
Yeah.
So this will be called direct quote, yeah? Direct quote. If today, if you buy from the till point of this Australian company, and if you have to make the payment today, how much will you pay to this Australian company? Any idea? So imagine you make payment today. You make payment on what date is 19th of November. Today, that is on 19th of November 2020. You will be calculating. You will simply multiply 30 million Australian dollar. Usually we write the symbol before the value. So 30 million, with some space. 30 million. If I'm making some spelling mistakes, please ignore it. And then we multiply it with the euro. Okay. 0.80 and euro 0.80, and this would be equal to euro 24 million. Straightforward. But this calculation would be in the spot market because I'm buying something today and I'm paying today. But that's not the case. In reality, payment will take place on what? In March 21. Let's have a date. Let's call it 31st March. Okay, on 31st March. I want to ask you something. Today is 19th of November 2020, and the payment would be made on if just imagine that if the payment was made today, then you just pay 24 million euros and buy the goods worth 30 million Australian dollar. Things, the case over, no problem. But the problem in this case is that you will be making the payment on 31st March in 2021. Today, the rate of exchange is this. Will this rate of exchange remain same on 31st March 2021? Do you think it will remain same for 4 months?
No.
No. It can go up. If this become, for example, 90, you have to pay 3 million more euros because then it becomes 27. If it becomes 70, you pay 21 million and you save 3 million. So it's always a gamble, always a guess, always a kind of like a lotto. Like it can go in your favor, it can go against you. Do you want to live in this kind of system, this kind of environment where things are so uncertain? Or you want to have more insured, peaceful business atmosphere? If you were a CEO of a company, would you like to have more well protected system risk management, or would you just take a risk? Okay, who cares? No problem. We'll see then. Or you have this kind of approach.
In that case, it's smarter not to take risk because it's unnecessary.
It's unnecessary. Very good. It means that you need to do the risk management. That is why in this course, you will see this word very often, expression, risk management. It means that management here. It could be possible that Australian dollar becomes cheaper, 70, and you gain. But we never see the unrealized gain, but we always keep protection for any possible loss. Look, in the future, and that is a way. Now, please listen my these words very carefully. Not only in finance, in other aspects of a life also. Today, you can imagine that, hey, in 5 years' time, I'll gain something. Or you can imagine that in 5 years' time, I would lose something. Your imagination. Will you start be more concerned, more attentive to this possible upside gain, or would you do something more to protect yourself any potential downside risk? What would be your approach? Did I make my question clear to you or not? Today, in 2020, you have a thought that, you know what, in 5 years' time, I'm very highly likely to get something. And you also have same time, you have also this feeling that, in 5 years' time, I would be losing. There's a chance that I can lose something. What would you be more concerned of? This potential loss or potential gain?
Potential loss.
Potential loss. Because the human beings always do some risk management for any potential loss. If it is a gain, it's a lottery. But if it is if you don't protect yourself and the loss is the reality, then it can be very dangerous. It's like how to say, it's like you have the car insurance, and just imagine for some time that the insurance company says, hey, you have a choice to have the car insurance or not to have the car insurance. And you see that, I've been driving the car for the last 5 years and I haven't met any accident. So why should I pay the car insurance premium? I don't buy the car insurance. Well, lucky you are if you don't have any accident. But just if you have it, or if you have the thought of having it, hey, what if I have it? That can be very scary. And this scare, this downside risk, this unfavorable situation, this potential loss will make you to go to the insurance company and buy the insurance. The same thing happens in finance also. It could be possible that on 31st March 2021, the $1 is equal to 70 cents in euro, 0.70 euro, or even less. But it can also be possible that on the day of 31st March 2021, this is not 0.80, but 1.80. You know what? Your company can be destroyed. So what you do, risk management is always downside protection. We always are more cautious. We never count the chickens before they hatch, but we always protect ourselves against the potential loss. Okay, so what we do then, what we do in this case, the ABC company goes to, for example, which bank is very famous in Belgium? Is it BNP Paribas?
Belfius.
Yeah. So, for example, ABC manager goes to BNP Paribas, the bank, and the manager explained the whole situation to the bank. And the bank has a solution that, hey, you know what? You don't have to worry every day. You don't have to live in an uncertain zone. We are offering you a rate which will be $1 Australian dollar equal to euro 0.83. And this is happening on what date? This is happening on 19th of November, today. And the bank manager says, hey, you don't have to worry. Look, there's 4 months. Do you want to live this 4 months every day, every moment? And you saw in Yahoo Finance that the values can change every second. So it means that people would be worried every second. Okay, and remember, companies have different currencies and they have many transactions. So can they remain in such a volatile, uncertain zone? No, it's not advised. And that is why the manager of this ABC company goes to the bank, which is I think if you, right, so it could be any bank for that matter. And the manager of the BNP Paribas, or the bank, any bank, is offering that, hey, you know what, this is the rate at which I can offer you to buy 30 million Australian dollars on 31st March 2021. So right on today, the bank is giving you a fixed offer that it doesn't matter what happens in reality on 31st March 2021, but bank, because they have their own calculation, they have their own forecasting techniques, they have their own people who are looking for the expected rates of exchange in the future. And they are offering you that, you know what, this is the rate I can offer you. And you can do the shopping also. You can go to one bank, it says 0.87, the other says 0.89, the other says 0.88. But you can, so basically they can quote different rates because the researchers in each bank, they might apply different forecasting techniques or the different variables. So anyway, you go to this bank and this bank is offering you this price and you agree. Imagine you agree to it. It means on 19th of November 2020, ABC is sure that it will pay. Now you can multiply 30 million with this rate of exchange, and this would be euro 24. So it'll be 24.9 million euros. And you don't make this payment today, but you enter into a contract. And this contract of ABC with the bank called forward contract. You understand this? Yes or no?
Yes.
Because if you are a big company having millions of dollars, euros, pounds transactions, if not daily, but on weekly basis, and you are a Belgian company, you not only have the transaction with Australia, but with New Zealand, with Asia, with Africa, with North America, South America, and this happens almost on daily basis, then you can't remain at the mercy of the nature. It's nice to believe in the nature, but you have to be proactive. You can't become reactive. You can't wait until something wrong happens to you, but you become proactive and to take the bull by horns. So you already go and make a very active, rather proactive risk management. You know, you manage your risk proactively, and you know that, you know what, it may be expensive by 3 cents, but it's worth buying Australian dollars already from the forward market, so that we can have a peaceful sleep for the next 4 months. and you don't have to worry each moment that what if Australian dollar goes up. I mean, it can be dangerous. Okay, so have a look at this example for maybe 2-3 minutes, and please let me know if there is any question or a comment or a query you have. Okay, but next 2 minutes, please focus on this example. If you are able to understand this, then a big part of finance you have understood. So as I said before, that I like theories, but I will try my best that for every concept I teach you, I give you some concrete real life example, because finance is a very application based field. And if I don't give you examples, then probably you will find it very abstract and a little bit confusing. So if in case I forget to give you some example and you want to know the concept theory with the help of some solid, tangible example, then please ask me, okay? I'll find somehow. But this was our today's inaugural session of Global Financial Management, and I'm very happy that you've been very participatory. Your questions have been very interesting, and please keep it up in the future also. Make sure that you actively participate in the class discussion. And if you have any questions, comments, never hesitate to ask me. In the chat here, you can send the message to everybody, but you can also address your question. If you're hesitant to ask, use chat, and because you think that everybody would read, you can choose only me and address your question to me. But even though I think, why should we hesitate? But just in case, you can ask your questions directly to me as well. And then I would not name you, and then I would answer the same thing, just in case you want to have this kind of strategy. But it was a pleasure meeting you all, and we shall meet tomorrow, and then we will carry it on. And now we close our meeting for the day. Okay?
Yeah, thank you very much.
Thank you very much, and have a nice evening.
Bye.
Have a nice evening
Take
too.
care.
Thank you.
Bye-bye. See you tomorrow. Yeah?
See you tomorrow. Thank you.
See ya. Bye-bye.